Hey guys, this is Simon with Trade and Perform Coaching. It's Sunday evening. I wanted to kind of do a little bit of a trade review and a trade preview going into this week. Kind of give an idea of what I was looking for and where my successes and where my failures were for the week. Look, I think you can learn a lot more from where you had your failures than from where you had your successes. Also, uh, I did something that was really, really important on Friday that for many traders leads by the inability to do what I did leads a lot of traders to having massive losses on a day like Friday. And I want to show you. To start off, right in this area, talking right in here, I had a swing short set up off of this entry. And without going through great detail, because those of you that are newer to my trade reviews, uh, just we would get lost in the minutia of explaining how I execute the swing short. But needless to say, this was the area where I got swing short. If we look a little bit earlier in the day, you can see that. Here, let's erase this real quick. We got a swing long right near the lows of the day, right? That triggered at the close of this bar at 1887. Low of the day was 1884. I come over and I get a swing short trigger at approximately 1900, right? And I did not take the swing long, and I did take the swing short. And what happened was right in this area in a very brief period of time, I took two stops back to back, right in here. Now, my swing short and my swing long are normally very high odds trades. I had determined before I'd come into the day that I wanted to be very careful with non-farm payrolls. What's the reason for that? Non-farm payroll draws out what's called OTF or other time frame. These are hedge funds, mutual funds, um, pension funds, and they really just don't care about intraday support resistance levels. They tend to run very large orders all through the course of the day, and non-farm payrolls tends to bring those guys out and force them to make very large changes to their portfolio that can lead to huge exaggerated runs. And that's exactly, let me pull this down here and fix that real quick. That's exactly what we ended up with. If you'll look through the course of the day, this is exactly what happens um, with non-farm payrolls is potentially right now. The market's been immune to this pretty much since post 2009, post QE. We have had fairly non-volatile Fed non-farm payroll days, and the reason for that has been that everyone's understood that the market is being backed by the Fed, that there was a Fed put in place, and there just wasn't a whole lot of reason for fear. My biggest concern coming into the day was very brutal, fast rotations that were untradeable or very extended, very hard drives, right? So understand when I came into the day, I was already aware that we could have a day like today, and my key goal was to not get run over. Now, understand, I didn't get run over in the first hour if we open that up. First of all, we can see that we opened up the day, and we opened up into balance, all right? See this right here? This area was a 50-60 retrace from the regular trading hours swing low to the regular trading hours swing high. This is the 50-60 retrace. In retrospect, I probably should have looked to have a long out of this area, but again, due to the potential volatility, I generally don't trade in the first hour anyways, and I did not trade. As you can see, you would have had to have the patience of a saint to hold the long from down here. We pushed in the first 5 minutes from 1890, essentially 1892, all the way down to 1883 area. And you can see that we whipped back and forth for the first hour throughout that range. I consider that not only very untradeable, but for most traders, it's been my experience that this is where a lot of day traders lose an enormous amount of money because they either try to momentum trade it to the upside and keep getting caught on the other end of this. Example of that is, oh, we've pushed to a new high, we must be pulling back, and then pushing to new highs. You put a 2 point stop behind the midpoint, you get stopped out. You think, oh, we tagged a new low, we must be ready to push to the short side. I'll wait for a retrace back into the middle. You take the retrace back into the middle, you get stopped out over here before it rolls back down. This to me is very, very difficult trading. So I didn't do anything in the first hour. Not trading the first hour keeps me safe. Sure enough, we break to the upside. Um, and then the next question is, well, does the zone hold? And if you look at the zone, we spent 5, 10, 15, 15 minutes before it breaks to the upside. So the first thing this tells me is that all of a sudden, notice we went from large 10-point rotations from bar to bar to an upside break, very little or almost no counter rotation relative to the upside move. And then we're not even consolidating within the zone for 20 minutes, which I would consider relatively normal. Usually the market will take a pause in the zones that are well placed. We did take a pause, but it was only a 15-minute pause. Then we get to about 10:20 and I get a swing short. Understand, I don't have a trade on the books here yet. And I'm not going to go through the details of my swing short indicator. I share them with members in the room. I've posted a couple of videos on it. But what I can say in this area is I ended up with 2 trades in this area. And normally, just like I got the swing long generate here and gave me a nice push up to the upside, actually, from where the swing long was triggered, we pushed from 1888 all the way up to 1904. It was about a 18-point move to the upside, and I didn't get it because I just simply did not trade the first hour. Get past the first hour, I figure things are going to settle down a little bit. I take my first short, an aggressive short, which is for me a number 2 trade, and I get stopped out right when we run to the backside. Additionally, within the first 5-minute candle, I come in and trap for what's in my swing trade is a number 4 setup in the room. I get short here, and I want to emphasize something. This will really only make sense to guys in the room. This is a very high odds setup for me. I expect it to give a significant push and perhaps even a 50-60 retrace, which means in this case, since we went from 1884 to 1906, almost a full 20 points, I would expect from this swing high to at least roll back down 10 points, which would have given us a backside test of, again, we're talking about from 1906 down to 1896, right? 1906. I'm thinking 1896, 1897 area. And I just cannot get pushed down there. And I wait very patiently. And one of the things that's going on here in my mind is I'm noticing, geez, this is a really high odds setup for me, this short, and it's not rolling down. I've already taken one stop. And then sure enough, I can spidey sense, and I don't know how to communicate this really easily, but I spidey sense that something's wrong. I see that we're not getting large counter rotations that we were having in the first hour, right? So we were pushing down dramatically, pushing up dramatically. And then at the same time, when I come over here and look at this time frame is from basically 10 o'clock to 11 a.m. And the one thing that I notice when I'm looking at NQ in this time frame, which is right, see if I can't get this fixed real quick. This time frame right in here, and what I'm noticing is that I kind of have some conflicting signals, right? We're not able to push all the way up to the gap fill on NQ or ES, but the rotations are just getting really tiny, especially in relative to the size of the rotation up. The market just doesn't want to go down, and my spidey senses, it's really going off here as a trader. But none of this is a problem yet, right? I followed my trading rules to the T so far. As a matter of fact, when we were in this area, I had shorted aggressively half my short at the close of this bar. So I was short at 1902. My stop was 1 point above the high. And I had another short sitting here at roughly 1904 to 1905 area. And I canceled that second short. And the reason I canceled it was something was just simply wrong. I couldn't in my mind put it together, but I could just see there's just a lack of rotation, a lack of seller stepping in, and I couldn't bring my mind around quick enough to put all the pieces together, but I knew I should stop adding to the position, which in this case, it was not averaging down. It was simply taking a small position on the aggressive entry and increasing that position size to a large position on the 50-60 retrace. That's very normal for me. I pulled the addition that would have moved this position size up to a large trade, and sure enough, I get stopped out 1 point above the high on this move up. Now, let me tell you something, guys. At this point, first of all, I'm very agitated, which is sending me a sign. The mere fact that I'm so agitated is sending me a sign that I need to slow down my trading. I don't know if people understand this, but it's very difficult to make a balanced decision when you're even slightly agitated, much less highly agitated. When I went back and used my journal, which I use on a regular basis, and that Dr. Steenbarger encourages everyone to use, right? What I'd written down was I was very cautious coming into the day about the potential for a um, vicious day up or vicious day down. My entire goal for the day was to not get caught, right? To not get caught, to not get stopped. And that's why I skipped the entire first hour. I thought I'd accomplished that goal by skipping the first hour and not getting run over, which I did. I didn't get chopped up in the first hour. But in my mind, after I had skipped really the first hour and a half, almost 2 hours of the day, I thought I had earned some right not to get run over. It was a little bit self-serving. And I thought I was really in a safe place where I could at least get my initial scales off, move my stops down to break even or net break even, and then move to the next trade. As it turns out, that is not what happened. And I want everyone to understand really carefully here what was going on. When things happened that were not going according to my plan, I got upset. Okay, and what happened was I got stopped 2 times without the ability to get a decent scale off on either trade. What happens next is the difference between a trader surviving a day like today or having massive drawdowns. What I did next was, first of all, I took a break. And while I was on that break, I called my own trading coach that I use, both Dr. Jeff Baldridge and Dr. Andrew Menaker. And I said, this is what happened. I'm really pissed that the market ran me over because I worked so hard to avoid getting run over on a day like today. And in years past, when I was running my hedge fund, I simply wouldn't trade on non-farm payrolls. But non-farm payrolls have become so harmless that I thought it was okay to step into the water, right? Well, no sooner did I step in than I got my fingers immediately chopped off, and I was upset that I'd allowed myself to walk into that trap. That being said, the next thing that I did was I sent to my room, I said, I simply should not trade the rest of the afternoon. I'm too upset. Even though I knew that once we had broken up here and I had sent out a tweet when we were consolidating here at 1919, I said we should probably move up at least to the 1930-32 area. Obviously, areas above did not surprise. But if I'd come back and traded, it really took time-wise, and I want to share this with people so they really understand how long it takes. I got stopped out at about 11:15, 11:10, 11:15 area out of the trade. I left, I talked to my trading coach, I had lunch with my wife, and I took the afternoon off. It took me all the way until I'd gotten till 2:30 in the afternoon until I finally decided that I was in a balanced enough place to trade again. That's a lot longer than if you would ask me under most circumstances whether I'm able to come back in and trade. So that being said, I simply folded my cards for the day. I had 2 stops and I did no more damage. And I want to show you something. If I come back in, and I know a lot of people are there, and they kind of get this revenge trade mentality. I've got to get the trade back. I've got to get profitable as quickly as possible. If I had entered the marketplace with that mentality, might have I made my money back short here? It's possible, but guess what? The market broke back up to the upside here in the last hour, and I could have repeatedly shorted. If you looked at each of these zones, these are valid short locations for me. Zone 1, busted. Area 2, 1935, 50, 1937, 50. Busted, right? 15 minutes. The zone paused, right? See how it paused right at the zone here? Paused right at the zone here. Paused right at the zone here. But nonetheless, I would have lost money in all these areas. So I often talk about separating the child trader and the adult trader. And in this particular case, I simply said to myself, I'm not in a good place to make trading decisions. The market opens on Monday. I've been trading extremely well this week. As a matter of fact, I met all my goals that I'd set out for the week, and I met them in aces. And I just had a bad day on Friday. Traders get in trouble when they can't accept their losses. Remember, look at this larger picture, right? Remember, I'm primarily a contra trader. I take shorts to the short side. This is where I got stopped out. The market proceeded to move from this 1904 area all the way up from 1904 almost to 1944. That's 40 points of trade location I could have fought. Enormous losses could have occurred. Instead, I went ahead and said the market had the upper hand on me today, meaning the other market participants, specifically OTF, had the upper hand on me. But I was going to step away and wait till Monday. So to sum up what had happened, first of all, if we look at each of the zones provided excellent trade location, right? We get a pause and rotation almost at each of the zones throughout the day. Pause, rotation down, pause prior to breaking up, rotation down after hitting this zone, pause in this zone, right? Given there were 20 minutes of pauses, and they did break higher, but they did pause at the zone. We reject out of this 1915, 1917 first time in, right? Open gap, there's a pause at the open gap, and I would normally look for a rejection there. And then as we get on up, this is Globex high. First time to this zone did not work, which I was surprised. That was the overnight high for 2 nights in a row, that 1930, 1932. 1935.50 to 1937.50 provide a pause. No counter rotations here. And then finally, you can see 1940, 1942 again provided pause. So the reason why that's important is I know that I'm putting my zones in the right location. Of that, I have no doubt. Right? It was just simply what I got upset about was I did not read quickly enough the fact that the counter rotations had um, pretty much ceased or collapsed significantly, that OTF had taken over, and that I was a prime candidate for getting run over in this area. But I did what was most important, which was I folded my cards. I didn't keep fighting all day, and it probably saved me an enormous amount of stress and losses to the upside. And if you want to be successful long term, conserving your emotional bank account, your psychological bank account, and your actual physical bank account matters more than anything else, at least in my eyes. So that's my 2 cents. My name is Simon. I'm with Trade and Perform Coaching. If you'd like to get an edge in your ES trading and you want it real, you don't want any BS, you don't want the woulda, couldas, and the fake stuff, please come visit us. You're welcome to ask for a 5-day free trial at tradeandperform@gmail.com. And I certainly look forward to welcoming new members into the room soon. So at any rate, I hope everyone has a great week this coming week. I'm going to do a market preview here in just a moment. And remember, follow your trade rules. Your stops are your friends, they're not your enemies. Don't overtrade on any given day, and make sure you know exactly what your trade plan is and that you have it broken out in writing before you jump into the water. Okay, guys, we will talk to y'all tomorrow. Have a great night. See y'all soon.